Hey, what's going on YouTube? Corey Smith here, CoreFX, bringing you another weekly market analysis video through T3 Live here on YouTube. I want to thank you guys for tuning in. Thank you for watching these videos, coming back week in and week out. I hope you guys are seeing value in them. Basically break down each individual currency and go over their top and bottom performers for the week before. I go over the news going on around the world in each individual economy, as well as the general state of the global economy. I go over the week ahead, what's going to be going on in the news, what events to be watching for, and then I also go over the technical charts for each individual currency and go over the key levels, the trends they're in, and just what we can take a look at and have a bias developed to expect to begin the week before we go ahead and even get started with trading, so that we know a game plan can always change in these markets. You just need to have a plan to start with and be dynamic and ready to change to whatever it is. So I'm going to go ahead and start with breaking down the individual currencies performance last week. Then I'll go into last week's news. Then I'll go into next week. Alright, so starting with the performers last week, we had a continued sell-off in the equity markets. And if you guys watch my videos often, or if you're familiar with the FX correlations, the Japanese yen is a very strong performer in risk aversion times, in risk off times, when there is volatility to the downside, when we have markets moving lower, when we have natural disasters, geopolitical events, war, anything that causes frantic feelings and investors to get scared and people to get worried about their money. This is called risk aversion, and whenever that happens, money leaves riskier assets, high return assets like the stock markets, and go to safer assets like cash, Japanese yen, gold, things of this nature. But the Japanese yen, as far as the currency world works, whenever there's risk aversion, stock markets are moving lower. The Japanese yen typically goes higher. So we did see that this past week. The yen was the strongest performer. The US stock market continued its crushing downfall, and the yen appreciated off of this. As you can see, the dollar was also one of the top performers, followed by New Zealand. And because the dollar was one of the top performers and this basket is weighted against the dollar, you can see that pretty much all the other currencies across the board were weaker this week. Pound was the weakest performer. There was 3 central bank meetings last week, so the pound did come off a little hawkish, but price action showed us bearish movement. So we did see some sell-off in the pound and the euro and the Aussie. This week continued. The dollar strength really is the story here versus all these major currencies, as the dollar moving higher moved the overall weight of these lower. And that's what really led to these moves this week. But the main story of the week is the risk aversion in the markets that we need to watch to see if it continues, and if it does, we need to be taking advantage of these strong and weak currency matchups as we go through the markets. Okay, so that takes us over to the charts, where we are going to go over each individual pair. Starting here with the US dollar, we had a strong rally up to resistance this week. As you can see, we've been in a really strong downtrend, hit this weekly support through a bullish engulfing off of it. So we had a bullish engulfing off, and I was telling you guys we had a double bottom here with this engulfing, and it looked like we were set to rally last week, and that is exactly what the dollar did. We rallied pretty much almost every day this week, and we've now come back up into this strong zone. This is a nice overhead demand zone, supply zone, sorry there. And then if we throw a Fibonacci out, you can see we're at a 50% Fibonacci as well. So we have some indecision candles. We have a doji and a spinning top here. Nothing too significant. There's not too much bearish pressure that came in off of this zone, but there is 2 rejections to the top here. So we could potentially see the dollar continue this downtrend now, roll over, and resume to the downside. Or it could break this level and come back up above this 91 support here. Maybe retest this daily trend line we've got here. But all in all, I do see the dollar continuing to be bearish, and I think it's at a good level now to resume this downtrend. Euro, we can see basically the opposite. We've been making higher highs and higher lows. We made this higher high. I said that we were in this high base, and we could either pull back for a higher low, or it could continue higher, and we did in fact pull back. we hit this supply zone now. Demand zone, sorry. And as you can see, we've now formed a higher low. Even though we do have a little bit of a lower rejection wick here, this wasn't anything too significant. There's still some bearish pressure here, so I wouldn't necessarily be looking to buy the euro until there's some kind of confirmation that this support's going to hold and it's going to bounce. But all in all, we're in an uptrend, setting higher highs, pulled back to set a higher low. Now we look ready to continue the uptrend and a move higher. Japanese yen, as you can see, backing it up, we are still in this very big range bound move that we're in here between 89 and 84. And this week we did move higher, tested this resistance, and actually ended up pulling back off of the resistance. As you can see, we do have a double top formation here. Price came up, hit resistance, sold off, bounced off the 20 SMA, came back up, hit resistance again. We tried to push higher this past Friday, but price ultimately ended up pushing all the way back down, and we got this shooting star candle off of resistance. So we could see a sell-off here, especially if we see the stock markets recover this week. If we see this crashing bear correction in the stock markets push back and recover gains, which I will show you the S&P 500 chart why I think that is a possibility. If that happens, the weakness should return back to the yen. And if weakness comes back to the yen, this double top should carry out and price should move lower. So if it does break higher, this is a very significant resistance. This is a very strong range that we've been in. And once it breaks out to the upside or the downside, you can expect a strong move. However, right now, we're having bearish signs of rejection off this resistance. So we'll have to wait and see how it plays out. British pound, same looking thing as the euro. We're higher highs, higher lows. Broke out above this very strong resistance, support, pulled back, and actually broke back below it again. And we've been moving lower this whole week. I think we could potentially come back down to the 133 level, 132.50. Retest this before potentially moving higher, or this could be trend changing. We could break this trend line and roll over, but I don't think it's at that point yet. I think we're just going to see a little bit of a correction, further maybe, and then a bounce and continue to the upside. Canadian dollar, on the other hand, we have seen this in an uptrend, setting higher highs and higher lows. But this week we actually did see a strong sell-off, and we broke this support, broke structure, and set a new lower low now. Now this is a very strong support and resistance zone, so we're definitely going to have to wait and see how price handles it. If we take a Fibonacci tool out to see what we retrace to, you can see we're just about at the 682 level, which is a strong Fibonacci bounce zone. But it is on very strong level, so we'll have to wait and see. However, structure has been broken, 50 SMA has been broken, 20 SMA is rolling over. We could see continued downside out of the CAD. Swiss franc, another story like the euro pound, higher highs, higher lows. Higher high was set, pulled back, setting a higher low. I do still believe that we're ready to move higher. This was a nice little correction that was pretty needed. I think we could find support here and push back up higher to continue to carry the franc into higher territory. Aussie sell-off continues, as you can see here. Price went up, hit that strong resistance level there that you can see has been holding for a long time. Hit the strong resistance and just fell like a rock off of it. We've now come down and hit support. We broke through the 50 SMA, but then pulled back. We're bouncing nearly off the 200 SMA, down on strong support. So we could see a little bit of a bounce this week. Another currency that responds to risk on, risk off. If we see risk on move and rally, the markets rally, usually money goes to the riskier currencies like the Australian dollar, New Zealand dollar, Canadian dollar. We could see it bounce and rally up to here before possibly continuing back to the test the lower low, or even setting a new lower low, breaking that structure. So I do think we might get a little bit of a bounce here from the Aussie to start the week, but all in all, still definitely bearish on the Aussie side. That takes us to New Zealand dollar. Sorry guys, my allergies are bugging me today. As you can see, we've been in this ripping uptrend. Hit this 74 overhead resistance. On the weekly, you can see it's a pretty strong zone. That 75 level on the weekly is held pretty strong. We hit it and bounced. Back to the daily, you can see made a nice move higher, double topped and corrected, but now this 72, which is a very strong level, is holding as support. We got a bullish engulfing off the bounce, off of a doji candle. So we definitely have some potential signs that the bull market is going to resume now. We got a nice little correction. This is typical of trending markets and markets in general. We got a nice correction. We could now see the New Zealand dollar push back to the upside and resume this uptrend to move back up to the 74, 74.50 area this week, potentially. So now I want to jump into the S&P 500 and gold really quick. Gold, I like this chart because you can see we were in a strong upward trend, and then we had a pullback, and gold has been bearish in a risk-adverse time, which is what is pretty wild about it. Let me switch this over. Do a different gold chart. See here, gold is has been selling off even with the poor performance of the stock markets. So usually gold has an inverse relationship with the S&P 500 and the markets. Like I explained about the yen, gold is a safe haven asset, and when the markets and the global economy is underperforming, typically the gold appreciates because people are taking their money out of riskier investments, putting them into something physical and valuable, and that is why gold usually goes up in value. However, we have been seeing a little bit of a sell-off in gold. It's normal retracement. If we throw this fib tool out here, we can see we're at the 382 level. This is also a nice little demand zone. So this is a nice area where gold can bounce, push back up to the upside. I do like this. We have a nice doji rejection here, and price is still kind of indecisive on this area, but I could see a nice bounce in the gold this week. However, fundamentally, we have been seeing conditions that typically lead to a strong gold, but we haven't been seeing it. So gold's been underperforming in a time when fundamentals show that it should be overperforming. That is a pretty bearish sign. Price action is always going to be the key. And price action is showing us bearish movement, while fundamentals are telling us a bullish story. So this tells me that gold could continue to slide lower fundamentally. However, we have to watch the charts and keep an eye on how price action is moving. And although we have seen bearish performance in bullish times, we are seeing some technical support being found here. It's a very strong zone when you look back in time, right around this 131 area, and you can see we're having some bullish price action. So gold is definitely at an interesting level to watch. I think we could see a nice bounce here, and we'll have to wait and see what happens. But the S&P 500 is what I really want to show you guys. Sorry, this chart looks a little sloppy right now. I can actually get rid of a lot of this stuff down here, but as you can see, we have had an extremely strong correction in the markets here. I just put a video up on YouTube about how fear and the human psychological aspect of the markets creates such bigger moves than when you have greed and you know, things are going good compared to when things go bad. So when markets are doing this good, you know there's a correction imminent, and typically when there's a sell-off in the stock markets, it creates fear, it creates panic, it creates hysteria, and everyone and their mother sells what they have and gets out of the markets because they're afraid it's just going to tank and they're going to lose everything. So that's why you see this strong sell-off. Typically in bull markets, the sell-offs happen a lot faster than the bull moves. So as we know, these markets are made up of a bunch of participants, and it's all mass human psychology. So all these moves that we see are based off of human being mindsets and instincts and emotions, and that is why this sell-off is a direct representation of fear. When the markets start to correct, people start to panic. They think this is the end of the bull market. This is going to be the top. This is going to be when it crashes. Everybody calls everybody and gets their money out of the markets, and we have a sell-off that just falls out from underneath. Now, that being said, fundamentally, the economy is doing great. Inflation picking up, yeah. Wage growth, yeah, those could be better, but the job market's incredibly strong. Unemployment's at record lows. The companies are hiring at record rates. There is a boom going on globally, and there's really no reason to be worried about this sell-off outside of it being a correction, and yes, one of the strongest ones in years. But at the end of the day, fundamentally, there's nothing really too drastic. I think this is just going to shake off some of the, some of this parabolic moves to the upside. It's given an opportunity for buying now to begin again, and I believe that this is just a normal correction. But what I wanted to show you guys on the technical point is we hit a daily and a weekly trend line with this nice hammer candle rejection wick. The 200-day moving average is what a lot of investors were watching, and this is what is likely to mark the bottom of this correction. It was a very strong sell-off, but we're in a very strong market, and we hit a nice level. This 200 SMA caused a really big bounce. We ended up closing up on the day on Friday, so I do think this could lead to a further bounce off of this low, and this could mark the lows here for the equity markets. I just wanted to show you guys that, to show you guys for one, the strong sell-off continued. Worst 2 weeks really since about 10 years ago, 2008. But I do believe a bottom's been made here, and I think this is just hysteria from such a great bull market finally having some correction that led to some panic and led to some more sell-off. There was a potential government shutdown again, and I think it just was a little bit of hysteria in the markets, and I think we'll continue this bull market now, offering some good entry positions now to get back into the long-term trend. So taking us to last week's news, aside from the very volatile stock markets, we also had 3 central bank meetings, so this was a really volatile week as far as fundamentals go. Starting with Sunday, we had Chinese PMI services PMI, beat expectations, not really any big deal. I did tell you guys it could potentially cause some trading opportunities Sunday night, but I was not looking to trade. It was actually Super Bowl, and I was watching the Super Bowl, so trading wasn't on my plate. Going into Monday, we had pound services PMI, missed expectations, missed both the PMI expectations the week before too, so we saw a continued weakness to start in the pound as these PMI numbers have consistently been missing targets now. US dollars manufacturing PMI beat expectations. Starting the dollar off the week, a little bit of bullish news. We had Draghi speaking at the annual report in front of Parliament. Euro was slightly stronger after, but nothing really going on there. Aussie had retail sales and the trade balance. Both missed expectations. However, this was pretty much overshadowed by the RBA rate statement. The Aussie was weak going into it, but a lot of it was just anticipation of the rate statement. They left rates unchanged as expected at 1.5%. This marks 18 months straight with no change to the rates. Last time they changed the rates, they slashed them. They did note that the housing market is finally cooling down. They've had a really big increase in asset value of the housing market over in Sydney and other parts of Australia, but prices are returning to normal levels now. This is allowing the RBA really to focus on other things going on in the economy and not have to be so worried about that. So the next rate hike is actually being priced into the markets as next year, February 2019. But as we know, these outlooks are simply an outlook and a plan, and they're subject to change at any time based on economic conditions. And they remain data dependent, keeping a close eye on the housing market, but really on everything coming out. And the Aussie was weak before the report and remained weak after the report and for the remainder of the week. Following that, on Tuesday, we had the Canadian dollar's trade balance. This missed expectations with more imports than exports. Not that big of a deal. New Zealand had their jobs report, though, on Tuesday night. This was the big event on Tuesday. As you can see, they beat expectations on both parts. Unemployment rate ticked down to 4.5%, which is great news for the job market. And they had a 0.5% change in employment, increase in jobs as opposed to 0.4%. This is a quarterly report, and this was a strong report. There was initial weakness out of New Zealand, but then it turned strong, and the New Zealand dollar did appreciate after this. Taking us to Wednesday, we had New Zealand's Rbnz rate statement. They kept rates unchanged at 1.75% as expected. Forecasts remain the same, with the next rate hike not expected until Q2 of 2019, so a little bit later than the RBA just announced that they think that they have their next hikes planned in and priced in. They don't see their 2% inflation target being hit until Q3 of 2020, which was revised from last meeting, expecting the target to be hit in Q2 of this year. So this is a huge, drastic change due to the terrible miss CPI had their last reading in New Zealand, and New Zealand dollar really tanked off of this, and we did see it sell off after this report as well, with their adjustment in monetary policy and more of a dovish stance. After that, it took us into, we had obviously the press conference, then Governor Spencer spoke, and then China's trade balance missed expectations pretty badly. Another thing that was just throwing fuel in the fire of the risk-off move in the markets and equities moving lower. Then Thursday, we had the pound's Bank of England rate statement as well as their inflation report. So we had, they talked about rising inflation in the UK and how it remains above their 2% target, forcing them to be more hawkish. There's no evidence of inflation slowing down, which could force the Bank of England to act and hike rates sooner than they had expected. This, which would result in most likely a couple hikes this year. The last hike was supposed to be a one and done type of scenario, but this inflation situation remains on the rise and is really making them adjust their outlook, as we know they do. And this is really just increasing the expectation to 2 hikes this year, and they increased their inflation and growth forecasts in the inflation report, and really was just overall a hawkish meeting, and the pound did move higher off of it. But that did not sustain. The RBA statement gave their, the Reserve Bank of Australia gave their RBA monetary policy statement later on Thursday. And basically, they just gave more detailed report into their view of the inflation and the economy. And Aussie continued to sell off of this. Also had Brexit complications overnight, which sent the pound tumbling lower. And it reversed a lot of its hawkish gains from the Bank of England statement. That night, we had China's CPI and PPI, their inflation numbers. They were pretty much on par with expectations. So not much really going on there. Taking us into Friday, where we had the pound's manufacturing production met expectations, as well as their trade balance report, which did actually miss expectations. The pound continued to sell off between this and Brexit news. There was a scare of a government shutdown Thursday into Friday. However, Trump did sign a 2-year spending bill on Friday to end this shutdown. So that could have a lot to do with the recovery of the equity markets, as we opened with a sell-off and then recovered the gains before the end of the day. This could be based off the government shutdown being averted. CAD jobs report horribly missed expectations and did cause an initial 80 pip tank to the downside. However, it quickly reversed and recovered back all of those losses and ended up ending the day slightly stronger, which is a very wild price action. This shows a bullish sign for the CAD, as this bad of news still couldn't push it lower and see follow through. So this could be a bullish sign that the CAD wants to continue higher, even though this very bad news should have sent it lower. And again, we had the U.S. stock markets bottom out on Friday off the 200-day SMA, bounce higher, so we'll have to wait and see how the markets open, starting in Asia tonight and then moving into Europe and then the U.S. to see how markets are reacting after this weekend. So this takes us into next week. This is going to be starting on Sunday, February 11th. And as you can see, there's nothing going on Sunday. However, with the volatility in the equity markets around the world and how this correction's been going on, there is an increased amount of volatility across the board in the financial markets. So there can be trade opportunities for the most part this week, any day, even though there's not too much news. I still think that there's enough volatility in the markets where there's going to be strong moves across the board. So nothing going on Sunday. Monday, we do have this NAB business confidence report that we have out of Australia. It's just a survey of about 350 businesses to gauge their level of confidence in the business climate. And as we know, this is a leading indicator, because if their businesses are confident about the outlook in the future of the economy, they are more likely to spend more money on expansion, hiring, developing new factories, developing new product lines, whatever it is that makes them grow. When they're optimistic about the future of the economy, they act on it, and this typically leads to the economy becoming optimistic and getting stronger. And the exact same works in the other direction. If they're pessimistic and they don't see growth happening in the economy, they are going to be more likely to sit on their capital, hold on to their capital, not spend it, not invest it, not take out new loans, not hire new employees, and be a little more conservative, which then leads to a stagnant economy. So these confidence reports are definitely something to keep an eye on. Tuesday, we have producer price index out of the Swiss franc. Not very big news. This is an inflation number, but really not watched at all right now out of Swiss franc. Pound CPI, huge event. The numbers, these are the inflation numbers, the consumer and the producer index numbers. This is a huge event. Bank of England just came out hawkish, and they're worried about rising inflation continuing and not meeting their target. So they just increased their inflation forecast, and this number will be huge. Continuing rise in the inflation numbers, CPI, PPI, could bring strong pound, as we know that the Bank of England will be hawkish and acting on interest rates if we do see a continued pickup in inflation. So watch for, I'm going to be watching specifically for pound being strong coming into the event, for a little bit of buy the news, sell the rumor type of deal, but we'll have to wait and see. Either way, this is going to be one of the biggest events of the week. Following that, we have New Zealand's inflation expectations. This is a quarterly report of surveys to consumers gauging their expectations of the price of goods and services and how much they will change in the next 2 years. Basically, it asks people what they think inflation is going to do over the next 2-year time. Again, these expectations can be leading indicators, because this feeling and expectation can lead to reality when people act accordingly to their expectations. When they think inflation is going to pick up, they want higher wages. They anticipate prices increasing, so do things in response, and that leads to it happening, so on and so forth. Definitely something to keep an eye on out of New Zealand. Wednesday, we have preliminary GDP out of Germany. Not that big of a deal, but something to watch for Germany's economy. And then flash GDP out of Europe. This is the second report out of 3 for the GDP reading. The preliminary flash GDP was as expected a couple weeks ago. And this is really just a little revision to that report, so nothing big. Not the biggest impact, but it is still GDP report, something to watch. And if this does miss expectations, it could cause some movement. Then the other huge event of the week, we have inflation numbers and retail sales out of the U.S. Our consumer price index, which is our CPI, this is the strongest reading. Always a huge report, and the central banks are watching this data very closely to determine their approach to monetary policy. Increased CPI could lead to higher expectations of the chance for 3 rate hikes this year, and continue the bullish dollar recovery. We do know that the Fed is pretty much being priced in as hiking rates next month. So if we do see a pickup of inflation here, this could lead to even higher of an expectation of this happening, and it could lead to a strong U.S. dollar. However, if this misses, this could start to reduce the expectations of a hike next month, and the dollar could sell off in response. Retail sales, we know, is a gauge of the consumer spending in the economy, so that's definitely a good report to watch as well, but it will be overshadowed by the CPI. Then we have in Australia, we have jobs reports, which we know these are huge events in the Forex markets. The last 2 reports, they crushed expectations, so we will be watching to see if we get another strong report, or potentially if we miss and the Aussie reverses. Jobs have been some of the strongest data out of Australia, and if we see them start to miss, that might give us a slipping expectation for the next hawkish rate hike. So we'll have to keep an eye on this event. Could be a very strong mover. Thursday, we have the producer price index out of the U.S., similar to the CPI, only this is going to be from the producer side of the economy. Not as strong a report, but definitely still something to watch. Then we have manufacturing index out of New Zealand. This is going to give us an idea of how the manufacturing sector is doing. RBA Governor Lowe speaks as well on Thursday night at the Standing Committee in Economics, so something to keep an eye on. Friday, we got pound retail sales. This is going to be, again, consumer spending in the economy, something definitely to watch, as all the data in UK is very closely watched with Brexit and everything going on. So we definitely do want to keep an eye on that. Could be a good trading opportunity, but not typically a huge event. And then CAD manufacturing sales, another one, pretty much same story. Shows how the manufacturing sector's doing. Not the biggest event, but could be something to watch for. So that pretty much does it here, guys, as far as this pre-week analysis goes. This gives you guys a bit of an idea what happened last week, what's going on this week, what pairs to watch, and really just when to trade and not to trade around these events. So I hope you guys get something out of these videos. I appreciate you taking that time to watch them. Make sure you subscribe to T3's page. They send out some real good content. And check out a lot of their other videos on here. They've got some very talented traders and analysts going over the markets. And check me out too, core.fx, corefxtrading.com. I do a lot of analysis and trading educational type stuff as well. So I really appreciate it, guys. Make sure you give us some likes, some subscribes. Throw some comments if you have any recommendations or things that you want to see covered in these videos. I really appreciate you taking the time, and have a great trading week, guys.